Thoughts on HDFC Bank at current levels? You have studied it for long.
Yeah, it's been a stock. I mean, it's been a bank. We've not actually bought it because of the merger and the complexities regarding what will happen with relatively higher funding costs, closure of a business line which is funding land, and perhaps reduced developer funding as well. And some of the other complexities inside of it, which is culture issues and how much time they take to kind of scale up. We saw in the last quarter, which was the September quarter, the first real quarter, the earnings growth was just 10%, which I think for HDFC Bank is the weakest for maybe over 6 or 8 years. Apart from the COVID blip, I don't even remember if that was an issue. But I feel right now that when the results come, we'll probably see how much some of these things have been addressed. We know that also retail lending from a perspective of credit cards, they're going to need to provision more capital, or not provision, but actually the risk weights have changed on the credit card business. They are one of the largest credit card issuers in India, so they will probably see some of the impact in terms of credit card receivables having a higher risk weight of 150%, and some of the retail lending, direct unsecured retail lending as well, where they're very, very strong. RBI has raised the risk weight. So there is, I think, some of these things are allowed to wait to see. While we might see some growth in this quarter, I feel commentary and how the bank readjusts itself is going to be another key attribute here. They're not short of capital, but I do expect that efficiency will come down a little bit.
From a stock which you haven't bought, let's shift focus to a stock which you actually sold off recently, and your note was making quite a round. Now that you're looking at it, almost 8-10% rebound from the panic lows. Are you regretting your decision, or you're still sure of what you did? Because Polycab now is getting targets of 7,000, 8,000 by some of the agencies like Jefferies, Goldman, etc.
Yeah, all the best to them. But we have a very strict rule that when some such things happen, we get out before and wait for clarity to emerge. It might emerge at a higher level. We're fine with that. We're not keen on getting into the getting dragged into a mud fight between what is perhaps the IT department making these statements and perhaps the company. I feel here they're going to get about 3 months after the IT raids or IT survey and search, that they will actually get the formal accusations and the formal orders, perhaps also from the income tax department. That will be the point at which we'll figure out if this is serious or not. It may not be, and people may be right. That's fine with us, but we have to follow the process, because the downside is not particularly happy. We're okay because we've held the stock 2 years plus. So in that sense, not. I mean, we've recommended the stock 2 years ago, so it's more than 150% up even after the fall since then. So this minor 5-10% is not a major concern for us overall. But we'll wait till the air clears. Good luck to them. I hope everything works out.
No, sure, I think that's a fair point.
Deepak, what are the areas you're nibbling in last couple of weeks or months? What are you researching?
Of LIC, it's a very large position, so we're invested. I think two things in the favor. First is of course the government had to reduce its shareholding from 96 odd percent to 75%, and people thought it will happen now. I think the government has decided that they will get a 10-year holiday, so till 2032 or so, to have to actually increase the public shareholding to 25%. That means government's sales will not come and flood the market, so that reduces supply a little bit. The second bit is their economics in terms of how the company works itself is rapidly taking a change. It's going to happen over a period of 3 years from the inception. They first were taking out only 5,000 crores a year as profits to shareholders. That we had estimated would increase quite dramatically. The first year after that, it has gone to 36,000 crores in FY23. In FY24, I'm expecting of the order of 40 to 45,000 crores to be transferred to shareholders, and then subsequently we are going to see probably even more than 50,000 crores. Once a couple of other items start to kick in, they will take. They are currently taking 7.5% of the profits of participating policies to shareholders. They're allowed to take 10, but they will only start taking 10 from next year. That means there's a 33% increase in the profits that they will be able to take out from participating shareholders as well. And that is about, that's a significant part of their book. I think 67% of assets, 90% of business comes from there. So I think that that will also cause an upward revision. They're valued at 0.6 or zero point 0.7 times embedded value. And I feel here that companies like HDFC Life are valued at 3x to 4x. Even insurance companies in China are valued at least 1x. Regardless of what people think is their growth or their market share reduction or something like that, I believe this is a very aggressive company, and I think longer term they will do well. This is one of our big positions, so very biased in that perspective. It's gone done reasonably in the last few months. I think more is there to come.
And you also have been always having large positions in Reliance and Jio, in that sense as well. You track telecom in that sense with Airtel, etc. as well. Talk to me about what are the levels you're watching out for Reliance going forward, in the sense what kind of return we should expect over the next 12 to 18 months?
So I can't really comment on returns because markets are strange. Whatever I comment can happen in 1 year, it can take 10 years. But we typically look at the business and say, well, is the sum of the parts, like company like Reliance, it's a sum of the parts valuation because they have so many businesses. The largest ones being right now in the telecom, oil and gas slash chemical space, and in retail. So each of those three, I think, are very, very large businesses. They all benefit from the fact that there's a cash cow in the form of oil and gas and petrochem. But they're also independently profitable now without needing to have the support of the oil and gas or sorry, the petchem oil to consumer kind of play. Eventually, there will be a demerger of all of these elements. Geo Finance was one, but I mean, I didn't expect that to be too much, but apparently the street is very excited. But that's the smallest of them all. I think the eventual demerger between oil to consumer, Geo, the telecom, and related technology based subsidiaries, and Reliance Retail, the three big players here, will be higher than the sum of than currently what the market is trading at. And I believe that will take 4 to 5 years. So what happens in the next 12 to 18 months is probably not going to be so exciting from the business. They need to improve their ROEs, but that's happening very, very slowly. I think it will be very interesting once this demerger happens. We're holding on for that.
The other bull versus bear case scenario is there in a bit of these aviation companies, and Indigo is the only investable idea in that universe, because if you look at the headlines coming in papers, social media, it's all about the delays and the lack of service. But if you go by the brokerage note headlines, they're quite positive about Indigo. What's your view on aviation and travel as an investable theme?
I think travel is really investable. I really think India is going to see a lot more domestic tourism, some international as well. International already happening. India is relatively getting more affluent and willing to spend on tourism. So that is, I think, a good thing. But I would focus on some of perhaps some of the other elements, whether it is hotels, where I think the play is bigger, though that cycle might be closer to its top. I will also focus on entertainment and other forms which are which will benefit from tourism as well. But I look at airlines and say that typically what happens in airlines is, and you've seen this over the last 30 years, the minute one airline seems to be stealing the pie, a few other airlines suddenly start to appear just because people who are rich want to buy airlines eventually, and that's what happens. So in the end, what happens is they become a slave to one commodity or the other. They're all fighting for market share because Nobody wants to let planes go even a little bit empty, and to optimize on that, fares take a tumble eventually. Right now, I think it's honeymoon season in the sense of very good pricing availability for anybody who's flying airlines, which is typically now the Tata Group and Indigo. But in the longer term, you're going to see this competition come by. And then if crude prices rise, this company, Indigo especially, seems to take a bigger knock than most other airlines. For some reason, there is a significant pressure on it. So not very happy holding this long term at the moment. I'd rather focus on other companies that will benefit from travel.
For example, hotel stocks, which is your favorite hotel?
So right now, Indian hotels we held for a while. We got out very recently, but the price has gone up since. There is also the succession issue that's happening in Oberoi, which might be interesting from a shareholder perspective as well. We're analyzing that right now. I haven't taken a position yet. We have other players in the transportation space, but right now the hotel space, I think you might be seeing the peak in sort of the mid capish kind of hotel scenarios. Luxury might still have some room, while not many players here, but I think the interesting players are already in that. Like I said, Indian hotels and Oberoi are the interesting players in this space. I think they'll have a little bit more runway. We might take a longer term position here, build something after a year or so. But I think we'll do very well in the long term here.
Deepak, next time, not be immediate next time, but in the next 2-3 years, whenever you're traveling to BKC Mumbai, you may actually, check into one of those EIH hotels in BKC. They are coming up with Anant Vilas, because the rising affluence and stock market community like yours participating heavily in that, I'm sure you'll have one more option to check in. So this is EIH now has been taken over by Reliance, and the group is actually proposing some new additions in their chain, including one at BKC by Anant Vilas.
But the question when
I'm
you
more
were asking
interested in
Deepak,
Anant
which is
Vilas.
your favorite hotel, you meant to stay, or did you mean to where you
The
should
stock.
invest?
Deepak, which is your favorite hotel in terms of stays?
So, honestly, the Taj has been very kind and they've been great, but also great with both Trident and the Oberoi. That's been also very kind. We've had great, times at the Leela as well. So I can't just say this is my favorite, but things change all the time. But, I think pleasant experiences all around with all these chains. The idea over here is, of course, when you go to a Taj or an Oberoi, you have a certain level of experience that will almost always be maintained. You've not been dissatisfied with it for the last 20 years, but you shouldn't mix personal feelings and investment, because a company that has great service sometimes can be a lousy investment, like Jet Airways, where people I think love to travel on it, but it has been not so kind to them as an investor. So you got to differentiate between the two. So I think I'll keep them separate right now.
Absolutely, we have seen that time and again in the stock markets. But Deepak, we'll let you go on that note. Thanks so much for making